Okay, welcome to another OctaFX webinar. Today we're going to be looking at the introduction to fundamental analysis. Now, in our previous webinar, we talked about technical analysis and how you can use what you see on the chart to trade. We talked about candlestick patterns and chart patterns, but now we're going to be looking at the fundamentals, which involves trading the news and how the fundamental analysis can make you a profitable trader. My name is Ebuka Ambrose, and if this is your first time, you can comment in the comment section or type in the comment section your name and where you're joining us from. Even if it's not your first time, you can just comment your name and where you're joining us from right away. Okay, we have Ugu Hillary, David Chemela, welcome. Victor Motion, Abel, welcome. And Victoria Sunday. Chinedu says it's his first time. Shakiru Jacob from Lagos, welcome. Christopher from Lagos, welcome. Okay, so what exactly is fundamental analysis? Now, fundamental analysis is a way of looking at the Forex market by analyzing economic, social, and political forces that may affect currency prices. Economic forces can be, the inflation rate or the unemployment rate or GDP, which I would also talk about in the course of this webinar. And political forces can be, election. If you recall, during the last US election, you remember that price moved, unusually, and market was very much volatile during that time. Now, the idea behind fundamental analysis is that if a country's current or future economic outlook is good, its currency should strengthen. And for you to be able to use fundamental analysis, you should understand how economic, financial, and political news will impact a currency's exchange rate, which would also require a good understanding of macroeconomics and geopolitics. Okay, welcome, Promise, and Matthew Emmanuel, welcome. Okay, so fundamental analysis is just trading based on news and events that is being released in a particular country. Okay, so how exactly does the news affect the Forex market? This is the question that a lot of people that are introduced to fundamental analysis always ask, how does the news really affect the Forex market? Now, the global financial markets are interconnected and they depend greatly on the financial and macroeconomic statistics. If you don't know what macroeconomic is, it's just like, how a currency pair effectively represents two economies, and this currency pair moves based on the economic differences between those economies, right? Now, being able to interpret, these two economies means you're considering microeconomy. It's just simple. And the Forex market is not an exception. Currency rates and the basic instruments of the foreign exchange market are affected by major financial news, fundamental statistics reports, and important geopolitical events. Now, these events can cause the Forex market to be volatile, whereby given certain currency, a gain or loss in value. As a trader, you should familiarize yourself with the key events that would heavily impact this major currency. Now, I'm going to give you guys an illustration on exactly how the news affects the Forex market. So let's say, this guy right here has to or wants to go on a vacation to the United States with his cousin. His cousin is already in the United States, so he's going on a vacation to the United States and he's going to stay with his cousin, right? And he has done an estimate. He has calculated that the total money that he's going to spend in the United States is $1,000. Now, he wouldn't be able to spend his Nigerian or local currency in the United States. So what does he have to do? He has to change it in the bank. Now he goes to the bank, and the value of this currency pair USD NGN is 410, and they tell him, for you to be able to get $1,000, you have to give us the value of the money you need in dollars, which is $1,000 multiplied by our rate, and it's going to give him 410,000 naira. So he gives the bank 410,000 naira in exchange for $1,000. And now he tells his cousin, I'm ready to travel right now, everything is set. So he travels to the United States to be with his cousin for the vacation. And he tells his cousin that, okay, I did an estimate, and I had a budget of $1,000 to spend throughout my stay. Let's say he's staying for 1 week. And his cousin tells him, nah, you don't need to spend anything. I'll take care of all your expenses, feeding, everything you need. I'll pay for everything, right? So he keeps this money. Good news for him, he keeps the money. And let's say he's staying in the United States for 1 week for the vacation. And during his stay, the United States released a positive news. And, positive news in a particular country tends to favor the domestic currency. Now, the domestic currency for USA is the US dollars, right? So the news, it could be reduced unemployment rate or a hawkish Fed decision, whatever positive news that was released. The main thing is that it favored the domestic currency, which caused the US dollar to increase in value, right? And that increase in value made the rate of the currency pair USD NGN to increase by 5%. And 5% of 410 is 20.5. If you do the calculation, 410 divided by 100 multiplied by 5, you get 20.5. So it increased by 5%, which is giving us 430.5. How did we get 430.5? We just added the 5% increase to the actual price, the previous rate, to get the current rate. So now he's still in the US, right? He's still in the US. So the vacation is over after 1 week, and he decides to return to Nigeria. Remember, he still has the $1,000, right? He cannot spend $1,000 in Nigeria, so he has to convert this money back to the domestic currency, which is Nigerian naira. He goes to the bank and he tells the bank, okay, I have $1,000 that I want to convert to naira. Now, because of this 5% increase, he's going to be getting 430,500 naira because of this increase in value of the US dollar against the Nigerian naira. So that's just a basic illustration of how the news affects the Forex market. We're going to be looking at factors that influence the Forex market. Several factors determine exchange rates of a currency, and all are related to the trading relationship between two countries. The first one is inflation. Inflation. If you study economics, you'd have heard about inflation or come to understand what inflation is. But I'll explain for you guys right now. Inflation is defined as the rise of the overall prices of goods and services over a certain period in time. As the general level of prices climbs, the purchasing power for each unit of currency declines. Let me say, for example, you know how much 1 kg of gas is today in Nigeria? It's about approximately $2, right? Now, 2 years ago, that same 1 kg, you can buy that same 1 kg with less than $1. So inflation has affected the currency, the Nigerian naira, and now it has caused the purchasing power for the Nigerian naira to reduce, and the price of the gas increased. So in the Forex market, the issue of inflation is very important because it is one of the primary factors the central banks consider when determining interest rates. Talking about interest rates, if you recall in Fundamentals of Trading, which was the one of the previous webinars that I've had, I told you guys that central banks tend to increase the interest rate to fight inflation. Interest rates, inflation, and exchange rates are highly correlated. By manipulating interest rate, the central banks influence inflation as well as the value of their currency, right? When the interest rate is high, a lot of investors tend to take advantage of this increase in interest rates and profit. What does that mean? It has affected, it has influenced the forex market. Okay, so talking about, since we've talked about inflation and interest rate, I think it's important for you to know 8 major central banks that you should look out for, because the decision that these central banks make influence a country's currency, or the country's currency. For example, if the Fed make a decision, it's going to influence the US dollar. So you have Bank of Australia, Bank of Canada, which is in Canada. You have European Central Bank, Bank of Japan, BOJ, Reserve Bank of New Zealand, Swiss National Bank, Bank of England, and the Federal Reserve System. It's also important that you take note of the abbreviations, because most market insights or fundamental analysis would, instead of using the full meaning, they're just going to use the abbreviation to make the analysis. So you wouldn't get confused if you actually understand the meaning of these abbreviations. Coming back to factors that influence the forex market, I didn't say this earlier, but if you have questions concerning whatever I'm teaching right now, you can just go ahead and type them in the comment section. I'll constantly check to see if you have questions and I'll answer them. So third one is political stability. Now, foreign investors look for stable countries to invest their capital. Generally, if a country is not politically stable, you'd see, I would not even want to invest in the country's currency, right? Because it's not politically stable. And when a country is not politically stable, a lot of investors lose confidence, to invest in the country's currency. Now, some causes of political instability is changes in house price and assets, changes in interest rates, government debt crisis. So political stability also has an influence in the forex market. The fourth one is public debt. Countries often borrow capital to finance projects in the public sector to stimulate the economy, which is not really like that bad. But when the debt gets high, then it's going to lead to a high inflation, which is also going to result to the depreciation of the country's currency. And if a currency is not doing well, most people would not want to buy the currency, right? That's the influence it has had on the forex market. And for this reason, the rating of the country's debt by rating agencies is a determining factor in the exchange rate of a currency. Fifth one is economic growth and recession. So economic growth, just like the name goes, economic growth is when the economy of a country is growing. Recession is quite the opposite. Okay, so recession is a macroeconomic term that refers to a significant decline in general economic activity in a designated region. If you're in Nigeria, you'd have heard about recession because the country has gone into recession I think twice in the past 10 years. And it had been typically recognized as 2 consecutive quarters of economic decline, as reflected by GDP in conjunction with monthly indicators such as a rise in unemployment. If you don't know what GDP is gross domestic product, which is the total monetary or market value of all the finished goods and services produced within a country's border in a specific time period. Now, recession can cause depreciation in the exchange rate of a country's currency. The sixth one is government intervention. Government intervention is, regulatory action taken by the government that seek to change the decision made by individuals, groups, and organizations about social and economic matters. So let's say an art center or a tourist center, or just an art center is built, and it's built to attract to get attention from foreign tourists, right, from foreigners to come in and view this art center. And for some reason, the government decides to close the borders or stop these foreigners from coming in, what's going to happen? If there are foreigners that have already exchanged their currencies to come in and spend and stay and view this art center, they'll withdraw or change the money back, and it's going to stop these foreigners from coming in. Now that has affected, or that has influenced the currency of this particular country, and that's a very serious factor that influences the forex market. Government intervention is basically any action carried out by the government that affects the market with the objective of changing the free market equilibrium and outcome. And the seventh one is relative strength of other currencies. Let's see a question. Is it better to enter a trade immediately after a news or wait till it's less volatile? We'll come to how to trade the news later, but yeah, we'll come to how to trade the news later. So the explanation is going to answer your question. Okay. The seventh one is relative strength of other currencies. This is just the comparison between one currency over another currency. Right, in 2010 and 2011, both the Japanese yen and the Swiss franc acted as safe havens as markets were concerned about the health of the global economy, especially the USA and Europe. Now, when you see examples like this with the countries, you just know that the major currency used in that country or continent were affected. Right, USA, you're talking about the US dollar, Europe talking about the GBP, euro, and this means that, or this meant that, although the interest rates were low in Japan and Switzerland, the currencies appreciated due to growing demand. So currencies in USA and Europe were affected. Yes, the interest rates were low in Japan, but the Japanese yen and the Swiss franc acted as safe havens for investors. And the basic idea behind supply and demand, right? When the demand is much, the value increases. So what happened to the currency? It's appreciated due to growing demand. A lot of investors saw the Japanese yen as a safe haven to actually invest their money. Okay, the eighth one, I think, which is the last factor that influenced the forex market, is speculation, market sentiment. Now, there are multiple factors that influence the forex market, but these are the most common ones that you need to know as a beginner trader. Okay, movements in the exchange rate are not always determined by economic fundamentals and are often driven by market sentiment. Now, if you don't know what we mean by speculators are like individual traders that purchase a financial instrument for short periods of time with intentions of profiting as the price changes, right? Speculators will buy a currency that they believe will increase in value shortly, increasing its demand and consequently its value. I mean, if 80% out of 100% of speculators decides that this currency is going to increase in value, so we have to buy this currency, what happens? The value of that currency increases. The demand increases and the value of the particular currency increases. Okay, so now you understand fundamental analysis and the factors that influence the forex market. We're going to be looking at what I like to call the king of all news, non-farm payroll, NFP. What is non-farm payroll? Now, non-farm payroll is the measure of the number of workers in the US, excluding farm workers and workers in a handful of other job classifications. This is measured by the Bureau of Labor Statistics, BLS, which surveys private and government entities throughout the US about their payrolls. Among all the news released by the US, this is the highest because it causes the most volatility in the market. The NFP is released on the first Friday of the month at 8:30 p.m. Eastern Time. So you just do a conversion of the Eastern Time to your time zone to know exactly when NFP is going to be released in your country or your country's time. Okay. Lastly, the NFP is an important economic indicator which is related to employment in the United States. Now, let's look at what the NFP report contains. The NFP report includes the non-farm payroll increase. What is the non-farm payroll increase? Okay, let me quickly answer this question by Henry or Nalifair. Can one trade on technical analysis only? Yes, I know traders that don't trade, don't look at the fundamental part of trading. But let me just give you this illustration. So if you have a heavy object, right, and you want to leave this heavy object, if you use just one hand, it's going to, it's not going to be easy for you to leave that object compared to when you use two hands, right? So it's important that, yes, you can trade just technically or with technical analysis, but it's important that you understand the fundamental analysis and the technical analysis, because you can't do without the news. The news is what moves the markets, so just like waking up, looking at your chart, and you want to place trades, you have to check what events are going to, what events that week is going to have, so that you don't place a buy and one big guy from the central bank just comes and says something that's going to make the currency price to fall. So you need to also look out on the fundamental aspect of analysis or analyzing trades. Yeah, so non-farm payroll increase is the number of new jobs added in the US labor sector in the previous month. This data includes employment in the manufacturing sector, the construction sector, the goods sector, etc., excluding farm workers. The name non-farm payroll, so it's excluding farm workers, and it also excludes private household employees and non-profit organizations. It also contains the unemployment rate of the United States, and it contains the the sectors of the economy these jobs were added mostly, which is going to give investors and traders possible sectors to invest, as the sector that added more jobs would be most likely to have more experienced growth. The NFP report also includes the average hourly earnings of the workers in the United States. And this is an economic indicator, because even if the numbers of workers didn't change, but the earnings increased, it's going to have the exact same effect as if the number increased. And the opposite is true. Same could also be interpreted in reverse if the earnings reduced. Let's see if we have questions. Let's see. Okay. The last thing that the NFP report contains is the revision of the previous NFP. So investors would compare the current value of the value of the current report to the previous one, to know if there has been an improvement or reduction. Remember, the NFP is released first Friday of the month at 8:30 a.m. Eastern Time, 8:30 a.m. This also gives you an idea if the economy is growing or the economy is reducing. Yes, Lukman, you're correct. It's best to trade the market with fundamental analysis and technical analysis. Okay, so now we've done the whole introduction, getting to know the factors that influence the forex market, fundamental factors that influence the forex market. Now we're moving to how exactly do you trade the news. Now we have different websites where you can get market insights or information or fundamental analysis from. You have Forex Factory, Bloomberg, investing.com. I prefer to use the wonderful market information section rather from the OctaFX website, which is what we're going to be using today. And we're also going to be looking at steps that you can use to trade the news. I think there are 5 or 6 steps here that you can use to trade the news. We're going to take them one step at a time. Okay, so the first one is to look out for the events of the week or day. So to locate this market information or economic calendar, you have to come to analysis and education, and then you come down to economic calendar. Now there are different uh, links here that could give you an insight of what the market is doing, has done, and would do. But we're going to be looking at the economic calendar today, because it's an economic calendar, like the name. Okay, someone is asking, how can you know when to buy or sell in Forex trade? We have there are previous webinars that we explained that. Now we'll just be looking at the fundamental analysis or fundamental aspect of Forex trading. Okay, so you can check out those previous webinars after this one, and you'll find answer to your questions. Okay, so we're at economic calendar, and yeah, the first thing, if you want to check the events for the day, you just set this to today, and it's going to show you all the events that you have for today. But I'll be using one from yesterday as a case study. Yeah, so event impact. Now you have low impact news, medium impact news, and high impact news, which is what this exclamation sign with colors represent. So the green one is for low impact news, and the orange one is for medium impact, and the red one is for high impact news. So if you just want to see only high impact news, then you just click on high impact news, and it's going to show you only high impact news. If you want to see just medium impact news and high impact news, you click on that, shows you just medium and high impact news. Okay, let me refresh this. All right, so we're looking at today we're going to look at news from yesterday. Let's look at the second step. So your main focus should be on high impact events. Why should your main focus be on high impact events? Because high impact events actually moves the market the most compared to medium impact or low impact events. Okay, so the third step is you should confirm the release time and understand the meaning of the event and possible outcome. So if you're, let's say we're here, and you look to the left, you're going to see that there are different abbreviations that represent the currency of a country, like CNY, which is the Chinese yuan, and GBP for Great British Pounds, CAD for Canadian dollars, and USD for the US dollars. Okay, so when you see this, it's trying to tell you that this news is going to have effect on the US dollars, and for this news is going to have effect on the Canadian dollars. So you check out the time, and then for you to understand the meaning of this event, you just have to click on any of the events, and it's going to explain what it's about. Click on this, explain what it's about. For example, let's say the retail sales control group. Now the retail sales control group, published by the US Census Bureau, represents the total industry sales that are used to prepare the estimates of PCE for most goods. If you click on Consumer Price Index, the MOM is okay. Yeah, the fourth one is for you to take note of the previous value and forecast. Take note of the previous value and forecast. What do we mean by that? So let's say, try to load this again, see if it comes up. So if you open the OctaFX economic calendar, you're going to see that at the center you see different values. You see previous, you would see forecast, and you would see actual. Now, taking note of the previous and forecast is going to give you an idea of what is going to happen if the forecast is greater than the previous, if the actual rather is greater than the previous, or the actual value is lesser than the previous value, right? So in most cases, if the actual is greater than the forecast or the previous value, then it's good for the currency. If the actual value is less, if the actual value is less than the previous or the forecast, then in most cases it's negative for the currency. The fifth step is for you to wait for news release. So a lot of people, there are different strategies that you can use to trade the news. Okay, this is back. There are different strategies that you can use to trade the news. Some people place stop orders or pending orders before the news is being released, but I prefer to wait for the news to be released for me to actually understand the direction of the market, right? I don't like to assume, so the value that is being released, or whatever value is being released from the news, is going to give me like a direction of where the market is going to go. Okay. So if you have questions concerning how to use the economic calendar, you can type them in the comment section. I would look to answer your questions. I also forgot to tell you guys that you should select your time zone and put it or set it to the time zone of your country so that you can see the event in your own time, right? Okay. The sixth step, which is the last one, is combine with technical analysis and strategies. Somebody asked the question. So the best way to trade fundamental analysis is also to combine with technical analysis. You don't just because the news is being released on a particular currency pair, or a particular currency rather, and then you just come to the market and you're like, okay, positive news is released on USD. Let me just buy USD blindly. No, you need to take you need to observe support and resistance, observe the exact market structure so you could perfect your entry, so you don't enter the market wrongly. You don't want to just place trades blindly. Okay, all right, so let's look at producer price index, which was released yesterday at 2:30 p.m. So what do? We understand what producer price index is. How do we do that? We just click on this and then the meaning comes out. So producer price index, the X means excluding food and energy. So I'm checking if you guys have questions before I talk about this. Okay, so the producer price index excluding food and energy, released by the Bureau of Labor Statistics and Department of Labor, measures the average changes in prices in primary markets of the US by producers of commodities in all states of processing. So it's just the change in price of finished goods and services sold by producers, excluding food and energy. These volatile products, such as food and energy, are excluded in order to capture an accurate calculation. So generally speaking, and at this point, you need to actually take note of this last sentence, because it's going to tell you what to do if the reading is high or the reading is low. So generally speaking, a high reading is seen as positive or bullish for the USD, whereas a low reading is seen as negative or bearish. We're using this because this was yesterday, 2:30 p.m. We're using this because the news has already been released and we have our values, right? So the actual value at the time of the release is 7.7. 7.7 is higher than the previous, right? The previous was 6.8, right? And this is 7.7. So the actual is higher than the previous, which is seen as positive or bullish for USD. Okay, so I'm just going to use one of these currency pairs, USD. So we're going to use USD, US dollar against the Swiss franc, which is abbreviated by USD CHF, as an example. Now, what normally happens when news is released is market tends to be extremely volatile. High impact news, when high impact news is released, market tends to be extremely volatile. So this is a medium impact news. How do we know that? Remember, I told you the two exclamation marks, that is orange in color, represent a medium impact news, while the three exclamation marks that is red in color represent a high impact news. So this is kind of a medium impact news, which is going to have an effect, but not so much effect as compared to when a high impact news is being released. So looking at US dollar against the Swiss franc, and okay, this was 1:30, 14 December, which was yesterday, 1:30. If you look down here, you're going to see where it says 14th December, and then the time 2021, and then the time 1:30. Okay, so remember, the best way, the last step is to combine with technical analysis and strategy. So if I'm looking at this chart right now, I'm already seeing a resistance zone that was hard for price to break. So let me just quickly move this to 2:30, which was the actual time. Let's see, what time is it? Okay, still 1:55. Let's see. Okay, so this is 2:25. Now the news was going to be released in the next 5 minutes. Now at this point, we're already seeing a resistance zone right here that price found difficult to break, and then we're also seeing this. So remember, the news that was being released, the value of the news that was being released indicated that, let me pause this. So the value of the news that was being released indicated that USD was going to be bullish, right? It indicated that USD was going to be bullish. So this is 2:25, 5 minutes to the news being released, and price has broken out from the resistance zone that was hard for it to break out from before, right? That's broken out. So I can choose to buy at this breakout, or I can choose to wait for another confirmation, which is going to be this right here, this minor pullback, this consolidation that looks like a flag. Boom, I can choose to do this, to wait for this this minor pullback or this consolidation, and then enter at the breakout of the flag. So if I'm to enter a long position right here and just set my stop loss below the resistance, stop loss is below the resistance, that's 12 pips, right? How do you get a take profit? You can use, I prefer to use, previous zones that the market has tested, which is going to be this. You can use this, or you can use this. And what happens? Place your buy trade, wait for the market to play out by itself, and you anticipate for market to ride in your direction. But you're having enough confidence right now because the fundamentals have told you that USD is positive, so it has given you like an overall direction to trade the US dollar. So yeah, so if you had entered this trade, you see that your TP, your take profit level, would have been smashed. This is a very good 1-to-2 reward ratio for on this trade, USD CHF. So that's like a basic illustration on how you can trade the news combining with technical analysis, and there are different strategies that you can use, but yeah, that's just a basic illustration on how you can trade the news combining with technical analysis. So right now I'm going to just take some questions for the next 3 minutes and we'll wrap up. So I'll take questions for the next 3 minutes and then we're going to wrap up today's webinar. Okay, somebody says, I came late. Which app are you using for the news information? It's not an application. This is the OctaFX economic calendar. So you just go to OctaFX.com, come down to analysis and education, and then you come here to under analytics, you come down to economic calendar. So it's just going to give you a breakdown on the events for the week, for the month, and past week and past month. Okay, all right. So if I was not able to or if I don't see your questions right now, you can still drop your questions and I would answer your questions in the next webinar. But yeah, that's it on introduction to fundamental analysis. If this video was really informative, which I think it was, you can just go ahead and subscribe so you get notified when we release webinars. Let's look at the comment section again. What tool did you use to measure your take profit and stop loss level? It's called long position and short position on TradingView. So you just come with, I think, 1, 2, 3, 4, 5, 6, 7, seventh icon. You just use, if you're looking to measure your stop levels and profit levels for a buy, then you're clicking on long position. If you're looking to measure your stop levels and profit levels for a sell, then you're clicking on short position. Okay, I'll just take this last question and then I'll wrap up. Ikechukwu says, thank you very much. Yeah, you're welcome. Can all high impact news affect the market? For all the times I have looked at the market after a news has been released, there was a spike, like the market was affected. Okay, so I think it's safe to say yes, all high impact news affects the market, because every single time that I look at the economic calendar and a news is about to be released, once the news is being released, or 5 minutes, 30 minutes, 1 hour after, you notice that there will be a spike. Price is going to react to this high impact news. Okay, is it a must to invest before trading? I think you're trying to say, is it a must to fund your trading account before you start trading? No, it's not a must. OctaFX has provision for you to create a demo account where you can practice and practice and practice till you're confident enough to move to a live account. So just go to octafx.com, or you click on the link below this, yeah, the link in the description to create a demo account and start trading. So yeah, that's it on fundamental analysis.